I am so excited for this next year and next 5 to 10 in crypto. I think it's the best time to be building or even investing in crypto. And yeah, I could not be more excited. And I genuinely mean that from the bottom of my heart. Quick shout out to today's sponsor, Katana. We'll hear more about Katana's 1 billion cat campaign later today. But for now, let's get into the episode. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to another episode of Bell Curve. First of all, Happy New Year to everyone, and Happy New Year to my lovely co-hosts, Myles and Xavier. How you guys doing?
Doing great. Happy New Year to you too.
Happy New Year, everyone.
All right.
Well rested, ready to go.
Yeah, by that you mean hungover.
Hangover.
Yeah, hope everyone had a good end to 2025. It was a really interesting year, and we're going to use this episode as a predictions episode for 2026. And maybe just for folks who missed part one of this is kind of a two-parter. So we did a recap of 2025. We had just an overall, kind of explanation for the sentiment of last year. We had some categories, biggest winners, losers, biggest comeback story, that type of thing. So if you haven't listened to that, I would definitely recommend folks go back and listen to that episode. We're going to be talking all about the future this year. So we're going to be talking about 2026. But before we get there, we started off the wrap up for 2026 talking about what were the big themes of 2025 and how did we feel about this year overall. And I thought before we get into specific predictions and kind of the different categories that we have of predictions for 2026, we could start with an overview of where we think 2026 is going. And I can maybe start here. And I think this is a unique year this is a really unique start to the year, because generally there are actually a lot fewer predictions than I've almost ever seen in crypto. There also seems to be much less energy, frankly, that I've seen on crypto Twitter in a long time. But I do think what's unique is there's a general perception that there's a line in the sand. Crypto in the next 10 years is going to be very different from the past 10 years. And a lot of the predictions that I've noticed are on a very, very similar theme. And for the first time, generally, I think predictions go in a bunch of different directions, but I agree with most of the predictions that I've been seeing. And I think the general theme around most of 2026 predictions and where people think the industry is going to be going is that we are finally in the post-imagination, a maturation, scale-up of crypto as an industry. And what I mean by that is I think people got so excited by the technology of crypto that they did, they've gone through that massive bubble of expectations where everything is possible and there's going to be decentralized social media and it's going to touch every aspect of our lives. And I think now we've had 10 years of data points, and what the industry is consolidated around primarily, I'd be curious, you guys might disagree with me on this, but I think the early use case and traction for blockchains is money and financial. And I think we're going to see a scale up of both of those things over the next 5 to 10 years. I also think that one of the themes that I very much agree with is I think that we've moved from the driving force and animus of crypto as an industry being speculative. So a new hot thing comes in, hot money chases it, a massive speculation or speculative premium inflates. I think we're moving from that as the driving force into real businesses, scaled technology, and valuation methodologies that more closely mimic equities. And so I think we have to go through a little bit of a transition period, and the industry generally understands that. So there's almost, the way that I would think about it from the audience perspective is that there's going to be a gap where you had a bunch of stuff where there wasn't real value, but there was a ton of excitement, a ton of speculative capital driving up and creating very, very high multiples. And I think a lot of those are going to need to re-rate towards something that's more fundamentally driven. And so there might be a gap. And I see a lot of confusion this year where very good projects are objectively doing well on all of the metrics that matter, but their token price is continuing to fall. And I think it's that gap where the speculative premium is going out and we're resetting towards something that's more fundamental and sustainable. And, I think there's a lot more to say, but that's my general perception for 2026 going to the next year. curious what you guys agree on or disagree on there.
Yeah, I mean, I couldn't agree more in terms of like, I guess how the market is going to value these projects. It's a much higher bar these days of proving out, that you're actually addressing something with demand, right? And we've seen too many times in the past of like, especially on the infra side, where there was, I guess valuation was centered around what this like could enable or design spaces that don't exist yet, but could in the future. And now to go to market, like you need to come to market with proven out demand, right? And for L1s, that means like being more selective about the use cases you go after, right? So that you can like, instead of going an inch deep, mile wide, you need to come, to the scene, like basically at launch with proven out demand for at least one or two like specific use cases. So, I agree with that. But Xavier, curious to hear your thoughts.
Yeah, I think in general, I agree with the framing, Mike. 2025, I think what people were expecting it to be a sort of bullish year, especially with Trump in, and I think it didn't necessarily meet everyone's expectations. I do think, funnily enough, I've been thinking a bit about this prediction market or prediction episode and, where it's going in 2026. And if I rewind to where I was 12 months ago, I noticed in 2024, like I was feeling a bit more bearish, I think, than the rest of the sort of crypto ecosystem because I could feel the sort of like private market capital in particular that was drying up. And I felt it again in 2025. Of course, a lot less VC funds launched, a lot less projects raised money, etc. I have to admit, just with like the sentiment and all the posts and returning to fundamentals and the value investing in crypto and all of that, I'm kind of getting a little bit bullish again because it just seems like we are now we're definitely towards the bottom of sentiment. The question for me is like, how long is it going to last? If you subscribe to the sort of 4-year cycle, it could last maybe as long as maybe September-ish this year before things start getting better. If you subscribe to the sort of like no more 4-year cycle thesis, which is also a potential option, I think that it might end up looking kind of similar to 2025. But I do think just with everything going on in macro regulations, maybe lower interest rates, etc., better crypto businesses, I think the free money days in crypto are over, although I don't necessarily know that the token days in crypto are over. And I do think that we're going to see bullish times again. I mean, even today, you look at the charts and it's up like kind of 5-10% across the board. And you're kind of already thinking like, it doesn't take very much to get things going again. So I think maybe this space is a little bit too bearish on potentially what 2026 holds, where I do think that especially later on in the year, things could get very, very interesting.
I agree with that. And I think that speculative premium, if you just look at alt prices and market, that's already been deflating. And I think in general, as a rule for predictions, people do a really bad job because they tend to just extrapolate the trends of the previous year. If you look at almost every list of predictions through that lens, it mostly matches up. So if something's been going like this, people continue to predict it going like that. And I agree, Xavier. I think that this is going to be, I'm more bullish than I've been in a while going into 2026. And I'll call one other theme out too. I think you're going to start to hear the phrase generational companies quite a bit. But I do think one other thing that I would call out is consolidation. I think that's going to happen in a number of categories. And it'll be at least a theme of my predictions as well, as I think the winners keep winning. And I think the way that I would call out something a little bit interesting that's happened in crypto VC and financing in general is that there's a little bit of an inversion of how risk gets priced. And what I mean by that in traditional VC is the idea generally is you're taking on more risk by investing in an early stage project, right? So if you're investing in seed, only a certain percentage of those make it to Series A, Series B, Series C. And so you have investors that take more risk by investing in seed stage. I think in crypto, that's almost been reversed, where because you get liquidity so fast and because you don't actually need to create a product that has product market fit or take a company public or get it acquired, the perception, and there's a lot of the VC apparatus has been set up to invest early, flip a token, And actually, the perception is that there's more risk at later stage because we have so few examples of companies or projects driving, continued outperformance in their token or creating real sustainable value. And it's created this very weird imbalance of capital where you have a ton of early stage investors. So many, if you're raising funds for an early stage product, you've got a lot of VCs kind of bending over backwards to give you money. But as you get later stage and more mature, that capital dries up. And I think that's going to reverse because what's happening in the industry is that there are these clear categories that are going to be valuable. The barrier to entry and the difficulty of creating a winner in those categories is higher than it's ever been. And I think what you tend to see even in Web 2 and things like that is that the winners keep winning, right? Like no one really displaced Netflix after it took off. Amazon, like you have these kind of category winners that are very, very difficult to displace. And I don't think that rule is broken in crypto. So I think that that kind of fundamental law of tech is going to, we're going to see it show up in crypto. And I think you're going to see a little bit of a change in the capital structure.
This episode is sponsored by Katana. Katana is a DeFi first chain built for deep liquidity and real yield by redirecting chain revenue back to active DeFi users. The 1 billion KAT campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started.
All right, let's get into some specific predictions for this year. So we grouped these in terms of categories to organize it for all of you listening. So we've got one category is ecosystem. So we're going to be talking about general predictions for Ethereum, Bitcoin, Solana, etc. Two is DeFi. The third is RWAs and stablecoins. Fourth is prediction markets. And then the fifth is VC, in general investment markets, etc. And then I think we'll have, maybe we can add a smaller 6-month on there around AI. This is not an AI podcast, but I know we have some perspectives there, at least where it intersects with crypto. Okay, let's start with ecosystems. And again, maybe I can kick us off here. And I would summarize, I want to maybe concentrate on the 3 big ecosystems and maybe talk about Hyperliquid a little bit as a potential fourth, although I probably wouldn't still include them in that category yet. I think, so Bitcoin, Ethereum, Solana, I think it's going to be a tough year for Bitcoin from a sentiment perspective for a number of reasons. I think it's going to be a great year for Ethereum. I think there's a renaissance happening there. I think it's going to be a quiet year for Solana, but ultimately a good one. And I think it's going to be a really challenging year for Hyperliquid. And I'll go through my rationale for each of those things. I think for Bitcoin, one, Bitcoin's had a really, really good last couple of years. And so I think there's just a natural consolidation that ends up happening after the run that Bitcoin's had from the bottom in 2022. But I also think a huge part of the driver of Bitcoin's outperformance has been Michael Saylor. And I think there's a lot of reason to believe that he's not going to have as much dry powder as he's had in the past. I think you also have Bitcoin's going to struggle to compete against gold as a very similar asset and profile. I think generally the kind of macro environment that we're heading into is one of less kind of runaway money printer go burr growth and maybe one of, more stagflationary, like inflation is going to continue to be there, but I think economic growth is going to be a little bit more challenged. And I think gold does better than Bitcoin in those environments. And I think the quantum stuff is going to be real from a fear perspective. I think that generally that's going to get very, very noisy going into this year. I think a lot of investors are going to question that. And I think price turning over is going to, make those fears louder. I think the devs are going to get their shit together by the end of the year, but I think it's going to take a while and they're going to drag their feet because the Bitcoin core devs always drag their feet. So I think it'll be fine. But I do just think in general, it's been such a good last 3 years for Bitcoin that we're due for a reversal in sentiment. On the Ethereum perspective, I think it's the inverse of that. So Ethereum is going through its kind of second big round of growing pains here. I'd call the first one, 2019 into 2020, when it was unclear if, gen purpose smart contract platforms are going to be a thing, and if anyone could compete against Bitcoin. And I think they convincingly showed that that was going to be the case. It has just been like a really tough last couple of years for Ethereum. But the way that I would frame this is, I think, no offense to anyone, I think some of their mental models were not necessarily correct. I think they tried to fire a lot of their customers, telling them to move it up to the L2. But despite all of that, I think there's genuine product market fit around the massively exciting categories of RWA issuance and on-chain finance. And I think that is going to be huge. And I think that's such a powerful imagination capture. It kind of has all of the elements that you'd want almost as an early equity investor. There's this kind of huge but vague enough market, like global finance happening here. I think that will, you don't have to make a lot of leaps internally to understand the fees that could accrue. And I think there's just real product market fit there, and it's happening almost independently of anything else. And so I think it's just going to be a phenomenal year for Ethereum from a sentiment perspective. Maybe less convinced on price, but I think this will be a real building year for Ethereum. Solana, I think it'll be generally quiet. I think the challenge that they have is they're kind of the DEX chain, in my opinion, and I think they've made real strides with Firedancer and Alpenglow. And a lot of what you're seeing on the microstructure side of DEXs, like these prop AMMs, I think you're starting to see the foundations laid, but they've kind of lost on-chain price discovery, or that's being threatened by Hyperliquid at the moment. They had it for memes, but the bloom has fully come off the rose for memes. So I think that Solana's tech is going to start to pay dividends. I believe in the neutrality of Solana as opposed to a more concentrated platform like Hyperliquid. And so I think they're going to ultimately win back, but that's their challenge for this year, is being the on-chain venue, or the venue for on-chain price discovery, which I don't think they actually currently have. But I think they're going to win that, and I think it's going to be a quiet building but very successful year for Solana. At Hyperliquid, I think this is going to be a really challenging year for them, because there are two big questions, right? There's one, how much dominance can they have in this perps category, which is just a viciously competitive category. Even the history of this within crypto, how many perps exchange have you guys seen people be excited about over the years, from like GMX to Gains to whatever? It doesn't seem like there's almost any sustainable moat, and they're all competing for the same small number of kind of crypto whales and loose money. And I don't know how many James wins there really are. But also there's just so much competition, from Coinbase trying to be the everything exchange to Robinhood. I think there's just vicious competition, and I just don't really see where the moat is. So I think that's going to be really challenging. And Hyperliquid is also, it's unclear if this is really a platform or a DEX. And I think there's just a lot of uncertainty and things that have to be figured out. And every major ecosystem has gone through at least one of these extremely challenging periods. And I just see that happen. I think this will be the first really big test in sentiment, community, long-term strategic priorities. I just think it's going to be a really challenging kind of mean reversion year for Hyperliquid. That's my summary on all of these different ecosystems, but I'm curious, what you guys agree with, disagree with.
I can just run through some like quick reactions. I think on Solana, I think they will continue to actually, I'm a little bit more bullish on Solana, I think, than you are for next year. Like, I think they will continue to increase their lead in retail app adoption. So like, if you're building anything with like a financial component, whether it's prediction markets or trading or like some new type of like social fi play, like I think your default choice is Solana today. And I think that will just only continue. And I think that will actually drive a lot of fees that the market wants to see from like, a platform. I think Base will probably start to look more and more like first party focused and integrated with the exchange, as they see themselves like kind of losing this like, to Solana in terms of like getting third party apps. So they'll just lean into the winners that they have today and try to actually exert leverage with their like, exchange to get more and more of those users actually doing things on Base, even if they don't know that they're doing things on Base. And then on Ethereum, I think it's not like controversial. Like, I think they are going to continue like winning RWA adoption. I think that they will, this won't translate though into the fees that the market, wants to see these days, basically with like, that they'll see Solana actually accruing a lot more value from the apps that launch on it than Ethereum is, just because these assets will kind of like just sit on chain. Unless there's lots of, new classes of like RWA buyers driving activity and demand there. But that's a much bigger if for me. So yeah, those are the main ones. I agree. Like Hyperliquid is kind of at a fork in the road where they, I think they're going to compete with Solana for like getting assets that people want to trade. right? And we'll see if they can actually compete on spot as well, because they need to if they're going to, I think, like be able to continue like growing their valuation. So yeah, Zave, what do you think?
Yeah, I think I agree with you, Myles, around the Solana point. I do think that they have a real niche right now in the market with attracting consumer app developers. And it's really the era we're in right now in crypto for consumer apps. And I think Solana is perfectly set up for this. The real competition there is probably Base, but I think we touched on it a bit before, but Base seems like maybe Mike, you had this in your prediction tweet where Base was maybe somewhere in between finding a niche and not finding a niche, and they're still trying to find out sort of maybe what their North Star actually is. Whereas with Solana, it's pretty simple and always has been. So I think I'm pretty bullish on Solana again, actually, this year. I'm like mildly or like sort of, conservatively bullish on Solana. With Ethereum, totally aligned with you guys. I think it's pretty clear that Ethereum is going to have a big year. I do actually think for the first time this could translate to price. And I might take the sort of contrarian angle here where I do think that Ethereum could start having a higher monetary premium in 2026 as chains like Stripe goes live. So I think it'll be a very interesting year for Ethereum in terms of adoption as well as like everything else that comes with that. Didn't touch on Stripe, but I'm also bullish on Stripe going live in 2026. I know a lot of predictions have been kind of bearish. Tempo, I should say, not Stripe. But I think Tempo in itself, like if Stripe gets some of their activity on Tempo, I do think that it could potentially be quite a big year. I think the last valuation was 500 million. I think that could look cheap in 12 months' time. So that's my take on Tempo itself. With regards to Hyperliquid, I'm neutral on Hyperliquid. I think that I don't know if they're going to have a majorly tough year. I was listening to predictions from 12 months ago, actually, in preparation for this episode, and almost everyone had the same prediction 12 months ago around alt EVMs like doing massively, and everyone was thinking about Monad, Mega ETH, Verachain, Hyperliquid. To be honest, like I didn't expect Hyperliquid to be the winner out of those four chains, and they are the winner now by far. And I actually feel like that is probably going to continue being the case at least for some time. So Hyperliquid, I'm neutral and think that they could have an interesting year, but I don't have anything in particular around how bullish or bearish I am on it. And yeah, I'd say those are my thoughts on those four ecosystems. I think in general, I'm pretty neutral across the board. And then I would maybe add that Base. Again, Mike might not necessarily agree with this take, and curious to hear you here, Mike, but I do think that Base is pretty interesting for AI crypto developers. Just with all the sort of A2A stuff they're doing, X4, O2 standards they're working on, etc., the distribution they have as well. Like for me, I've come across many crypto AI developers working in the Base ecosystem, and that is very early, and maybe 2026 isn't the right year for crypto AI, but I do think that it will be at some point. And actually, from what I understand right now, Solana and Base are pretty much 50-50 on this. So this could also be a bull case for Solana in 2026 if it comes earlier than expected.
Yeah, and I was just going to make one note there. Tempo raised 500 million. Valuations. Their valuation's right. 5 billion. So
right.
They've got to show like a lot to the market in 2026 if they're going to launch at that, right? But so yeah, they've set the expectation.
One point on the Tempo valuation, and I was looking at this before the episode as well. So Telegram at some point, maybe a year or two ago, had like a valuation in the several billions. And when their token launched, it actually reached pretty much the same valuation as their private market valuation. So this might be obscene to say, but like crypto can be obscene at times. And Stripe's valuation now is pretty much 100 billion. So you never know in crypto how these things are valued, if it will be anywhere close to that or not. So yeah, it'd be interesting to see what happens there.
One point that I had a separate prediction around this. I think that we are on the Ethereum versus Solana point here and fees. I think there's a lot of nuance to this subject. I had one prediction for this year. I think we're going to move beyond. I'm so happy that we're talking about revenue right now. It's also nowhere close to sufficient. And I think the vocabulary that the space is going to adopt over the current year or the coming year is revenue quality and durability. Just as concepts. And I think people will start to dissect income streams from this perspective. And one thing that I think investors are well and truly sick of is highly pro-cyclical revenue streams. We keep falling for this as an industry. I could name any number of projects that the revenue goes up like this. And, I see a bunch of people annualize at the very top of their income stream right when it's about to turn, because you're talking about a business which is inherently highly procyclical. And I think investors have finally cottoned on to this, and they're going to stop giving those revenue streams the same credit as revenue streams which are provably more durable. And the reason I think this matters, even when I look at Ethereum versus Solana, I completely agree that Solana is going to extract more value. There's just more value and fee potential for a chain that turns over as much volume as Solana does with their strategy. But I also think that investors will give a higher REV multiple towards what is more sustainable and predictable revenue. Like when I just think about the use case of issuing RWAs, on-chain finance, money market fund type things, that just is very sustainable to me, versus I see that the more retail trading, high slippage, fee extraction game, that's just a really cyclical income stream, I think, into the foreseeable future. And so even though the amount of fees could be quite different, I think that investors will, the way that I make sense of this in my head is essentially give a higher REV multiple to Ethereum than Solana. That makes sense to me. So I also didn't mean to sound bearish on Solana at all. I think Hyperliquid is able to pivot or counterposition successfully against Solana by being more opinionated and essentially just building a DEX right into the structure of this chain. But I also think that makes them not a platform. And I think that Solana's neutrality is going to ultimately win them that market. And I'm very bullish on Solana.
Yeah, I think a point on that as well. The difference with Solana in 2026 versus other years is that they were the underdog for many, many years, and there was a narrative around them maybe taking over Ethereum, etc. And now it kind of feels like they're a bit further away from that than they were maybe this time 12 months ago. And so, like, whilst I think we all are aligned that the future is bright for Solana, I think there's still, room for them to grow, and they still have a little bit more to go to like really get to where Ethereum is at right now. And if anything, Ethereum has kind of got their act together, which is why I think that we're all still bullish on Solana as an ecosystem. But I just think that Ethereum finally is like actually now there and is a viable competitor, and it's less known if they're going to be able to overtake Ethereum in the near future, which makes it more exciting to follow than ever, really.
Shout out to today's sponsor, Katana. Katana is a DeFi first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem of primitives, assets, and partners like Morpho, Chainlink, and more. Katana's 1 billion KAT campaign is live. Bridge and deposit directly into Vault in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started.
Can we go on to our next category of predictions here, which is DeFi? And maybe I can lead off, and some of this is going to dovetail with at least my thoughts on Ethereum. And I think we're all actually pretty aligned about Ethereum, but I think Ethereum rather has pretty convincingly won this RWA issuance on-chain finance use case. And I think part of the reason too, I think there's a road towards fees here for Ethereum where you have activities like one thing that I think is going to take off in 2026 is RWA looping and vault management. I'm not really sticking my neck out here, but I think if you look at a huge percentage of what's driven TVL and usage and things like Aave is this idea of looping. And there's an analog here, which is in traditional finance, people like to put leverage on extremely safe trades like a treasury convergence trade, right? So there's extremely low risk profit. It's not totally arbitrage, but it's the closest thing. And so you can take this trade, which is very safe, but doesn't earn you very much, and lever it up to get much better returns. And I think that activity is going to be replicated on-chain rails. And if you just look at the assets that people want to use in borrow lend protocols, it's much more it's mostly stable coins that people want to borrow or yielding assets. And so I think that looping behavior, people are going to want to replicate, but it's going to be on real world assets as opposed to digitally, bearer, digital bearer instruments like ETH. But there are lots of challenges to that. Like there's the liquidity cadence to RWAs that doesn't necessarily exist with, you can't just, like if you were to tokenize a delta neutral fund or something like that, you can't just take that into the market and sell it whenever you want, because maybe you can only redeem once a month. And so I think there are going to be some very clever protocol constructions that do quite well. And as a secondary prediction to that, I'll just get through my three here, and then Myles, I'd love to get your response. I think credit funds are going to be a much bigger thing. This dovetails with a future prediction, but I think there's going to be some real pain in VC. I think there's been some less than flattering performance over the last couple of years that I think is going to come to light and get reported on. But I also think the kind of long only altcoin strategies that haven't panned out, I think VCs are going to move into credit, but I think real big credit funds like Apollo and some very sophisticated credit traders are going to move in once they see this on-chain use case take off. So I think that's going to have a really big year. And then finally, I think the two big, if I had to, go out on more of a limb, I think Pendle and Morpho are going to be the two big DeFi winners of this year. Morpho, because they've got the right construction, they've got a great team, they've got a very simple, they don't have this labs token dilemma, and I think they're just going to continue to win there. And honestly, almost all of the curators and vault people, they're all building on Morpho, and they just have true product market fit there. On the Pendle side of things, I think they kind of built, there have been a number of attempts to build like an interest rate swap, ability to create fixed rate, borrow, lend. And I think Boros is going to be really, really successful around that. So I think it's going to be a big year for Pendle and Morpho. But curious what you guys think of any of those or any other predictions you guys have on the DeFi side of things.
Yeah, maybe I'll go quick. Like, I don't know. I don't know how strongly I feel about this, but I might take the other side of like the RWA growth. And what I mean by this is like, I think right now, we see who's like the demand side for these assets. It's crypto native, whales, crypto native institutional buyers, crypto native protocols, right? And so I think we will stall out unless we like can expand that demand side, right? Because it's fairly saturated at the moment in terms of who like new buyers are not coming in a ton. So you need like basically protocol driven demand. So you think about like a product that can sell B to B to C, right? Maybe it's a vault managed product that buys these assets and then integrates into the front end of like a fintech app, right? And so I'm just not sure like what the demand is for, integrating like DeFi mullet products that do sophisticated stuff on chain quite yet. But I do see that as like the most realistic path to like expanding that demand side for these assets. I'm just not sure if we're there yet. So that was, just maybe one quick reaction to that, just taking the other side of this a little bit. And then I think like we'll see a lot of, adoption of use cases that like bring their own demand side, right? So like you can think about treasury and like cash equivalents facilitating 24/7 financing against this on-chain collateral. And that could happen more in these like pseudo corporate chains or roll-ups, right? In like sort of walled garden environments. When, this is like something that people want, an institution brings their customers with them to offer it. And it's not actually like as DeFi native as we might think. So yeah, maybe taking the other side of that a little bit, but I think like there's absolutely a chance that you're right. And this plays out really well for those products.
Yeah, I think, Mike, your DeFi predictions are normally spot on. I think I directionally agree with most of what you mentioned just there. I do think that Aave will continue to grow. I'm also bullish on Morpho, but I think Aave will get us act together in 2026 and, still be something interesting that people see as having, quite bright potential future. Outside of that, with regards to more leverage looping. I think leverage looping with real world assets, it's definitely a really interesting concept. There is some risk there. I guess we will understand that with regards to like how to actually manage that with redemptions and everything, like you mentioned, Mike. So it'll be interesting to see if that can be built out and whether or not that causes any blowups. I think Mike, you mentioned that VCs might go a bit more into credit sort of styles of investing. I'm not 100% sure on that. I think VCs will continue doing crypto VC things until they're like bust. So, but I do think that you mentioned as well that, maybe some other bigger players will enter the credit space. And I totally agree that that would definitely happen. I do also think that the vault curation space in general is super interesting, will only continue to grow. I also think, related to that point, that when it comes to like products and investing in things like Morpho and bulk curation and stuff like that, I think it is actually kind of hard to build a moat around some of these protocols. So like there are actually quite a few bulk curation products being built in startup land right now. And of course, Morpho has a brand and they have the partnership with Coinbase. But I do think ultimately, Coinbase and distribution partners have the power when it comes to these kind of like asset management protocols. So the question is like, how much can they grow versus like a Coinbase, which has the power over not just the protocol, but also the curators. So that'll be interesting to see. I do actually think that 2026 could bring an application that gets its own distribution away from someone like Coinbase and kind of abstracts the curation thing and just provides some great yield with a great products. I think that could definitely happen this year. But yeah, I think in general, like actually maybe one other comment on DeFi, I guess in general in 2026 would be, I think Solana DeFi will mature, and I think it'll chip into Ethereum's DeFi a little bit. So yeah, I think Ethereum's really in a great place when it comes to DeFi, and it will continue to be that way in 2026. But I think Solana has maybe trailed a little bit in that department, and it'll be cool to see that picking up a bit this year, maybe.
I have a response to, by the way, to the curator side of things. I just think it's so hard to predict this stuff. And I think generally when people talk about where does value accrue in the value chain, it's generally done from a retrospective lens. And the idea is this was always inevitable based on the positioning. But I think in reality, the future is unwritten. And, I would reference a business like Steakhouse, which really successfully transitioned from being this kind of consulting service provider to a curator. And what, just anecdotally, if you want to build in this vault curation space, you really do have to go and line up the curator. Like they have an enormous amount of strategic leverage within the ecosystem. And ultimately, even if that spot probably isn't the right long-term spot, there's opportunity for a good team to leverage that strategic advantage and go either up or down the stack and build a more durable moat. So I think at this point, almost everything is unwritten. And I would give you like two examples of the past, how this has played out differently. I think a lot of the big staking providers had an opportunity to move up the stack. And it's funny, almost none of them did. But I would actually, if we reverse the clock back to maybe 2019 timeframe, the same fate could have been shared by many of the custodians. But firms like Anchorage successfully did move up the stack into prime brokerage and built a really great business. So I actually, when the value chain is this immature, I think it really is almost impossible to say this is where the value is going to accrue and which team is going to be successful based on where you're positioned today, because good teams that are worth their salt will build an advantage in one layer and then wake up and reassess, where the value is going to be. And then they'll have the opportunity to pivot and move and evolve into and build, unique moats across different rungs of the value chain as well. So I'm like less, people love to debate about this. I'm less certain that it's obvious. And I think there'll be surprises and good teams will have the ability to, regardless of where they start, to build huge businesses here.
Right. I mean, we're just talking about like asset management, right? Asset management businesses when we talk about like vault curators and things like that. And so, yeah, there's absolutely a massive opportunity.
Myles.
Like obviously there's a massive opportunity here, and it will be interesting to see if it, the successful ones are folks that specialize in this from day one in these very, very early days, or if it's just like asset management businesses that expand horizontally from, say, venture, into this sort of into these sort of products, right? If they can make money, they will. So, yeah, I agree with you.
Yeah. Can we go into, actually, I kind of skipped this category, but I had some thoughts on infrastructure in general. And I think that when I say on-chain infrastructure, I'm talking about, this is a specific prediction for kind of like L2s, roll-up as a service, shared sequencing, kind of this whole raft of related on-chain infrastructure that popped up in the last couple of years. It's already been pretty tough, but I think it's only going to continue to get tougher for that group. And I think there is a light at the end of the tunnel here. I think there's consolidation, but I think the end market structure for this is 2 or 3 vertically integrated providers. And Myles, I'm going to give you credit. We talked about this you can go back and listen to bell curve episodes and writing that you were doing 2-3 years ago, calling for the collapse and the vertical integration of frameworks, roll up as a service, shared sequencing. And I think all of these projects that started ostensibly that looked very different, and they tried to position themselves as leaders within this category. It's all the same thing. And I would actually, the analogy again I would reference is kind of this 2019 transition from custodians into full suite prime brokerage. And you had a bunch of different companies, like Anchorage started purely as a custodian, BlockFi started purely as this lender. And what you eventually, and there were tens and tens of these different custodians and lenders, et cetera. And what happened was there was actually a bubble in these private market valuations of these companies. And it was it took like 5 years to work through that valuation overhang. And what emerged was a couple of like Galaxy, Anchorage, FalconX, those sorts of winners from this category. It's like a massive category that consolidated. And I think that's going to happen in L2 land. And I think we had a little bit of a broken mental model too around what L2s were. And I think we talked about this before, but everyone wants to position themselves as a platform and an ecosystem. I just don't see it that much for L2. I think the ecosystem that people want to be a part of is Ethereum. And I think the mental model, as opposed to, there's the Ethereum ecosystem and platform, and then there's the, Mega ETH or whatever ecosystem and platform. I think people want to build on Ethereum. That'll mostly be a mix of corporates and new startups. But then there's this big opportunity for, like the Red Hat model of commercial open source software to provide, these value-added services on top of connecting to the ecosystem. But I think that's going to end up being 2 or 3 big vertically integrated solutions, as opposed to, we've just way overbuilt and way overestimated demand and how many solutions the market really needs. Yeah. So I think out of that, there will be a couple big winners, but unfortunately, I think there's still pain to emerge in that category.
Yeah, I agree. I think like what we talked about a ton 2 or 3 years ago was basically like, I was looking at these RAS frameworks, or RAS providers looking at these roll-up frameworks, and wondering why nobody had vertically integrated. If you're building a framework, obviously you should have your own RAS. Like that seemed very obvious. And 2 years later, like we finally see ZK Sync, I think is the first, one to do this like pretty explicitly. And I think they're going to do great. I think they'll have like actually a very good year because they've built up like an enterprise sales team for the past, how many years, right? They've now I think the product is fully featured. They have interoperability, they have privacy, they have a lot of good things. And, when you pair that with like a managed service business, with like managed service, great sales team, I think you can have a lot of success. To your point, like most rollups were just trying to look like L1s, and they were trying to act like L1s. And that I think has backfired, for most of them. But that's where I see it. It's like you build a vertically integrated solution that allows you to go like be very proactive on the sales side, lower the friction to adoption. And then you can also be a curator, right? If you're the infrastructure provider, right? You've got like all this different sort of activity. You can provide like a front end that helps people discover like, apps and things like that. So yeah, bullish on those taking that sort of like proactive approach to infrastructure. And I think even like Symbiotic and Eigen are kind of having similar realizations right now, right? Where they need like to be opinionated in the use cases they go after, maybe even build them themselves. And so I think, you see Eigen like now just kind of set on verifiable AI, and you see Symbiotic leaning more into like the DeFi side, right? And Lido now starting to do that as well. So yeah, I agree. We'll see a lot of like horizontal expansion from these infrastructure providers, building like complementary products.
Yeah, I think only thing to add on my end is I think it'll be another tough year for most infra providers. But the winners will keep winning, like the ones we mentioned earlier,
Yep.
like Hyperliquid, Ethereum, Solana. And if you're not in that bucket of winners, it'll be tougher. It'll be interesting to see with Monad if that gets adoption. Of course, fingers crossed Delta launches this year, and let's see how that goes as well when it comes up against some of the bigger players. But yeah, I think in general, infra is very competitive. It's never been harder, I think, to compete with the bigger players as they become more and more lindy. But that's also, to be honest, not to say that there isn't room for one more. Like, and this is the classic VC talk of like why they throw so much money at these infra projects. But I still think with crypto, like you actually don't ever know, and because infra is so sort of out of favor with the rest of the space, it could also be an interesting time for someone like a Delta or even like a Monad or someone like that to pop up and actually give some of the other players a run for their money. So yeah, it'll be an interesting year for infra, I think.
I agree. I completely agree. I also think one of the things that ends up happening in these sorts of cycles is there's a challenge from incumbents where they have a lot of debt. And I mean that both as actual tech debt, but kind of this organizational mindset debt that's really hard to overcome from an inertia standpoint. And sometimes actually coming in with a more fresh view of the world, more correct positioning, and frankly, just more energy. I mean, it's really challenging as an organization that's been going down for 3 years to turn it around. I mean, it takes exceptional founders and leadership teams, and money's not enough. It's just not. You need really exceptional people. And there are teams like that exist in crypto. There are also a lot of teams that I don't necessarily think that have that internal competency. So I think there's a ton. I completely agree. I think there's a ton of room whenever the category is left for dead, but it's obviously an important category like infrastructure. There's going to be big opportunity. So Myles, this is us gassing you up for Delta.
Hell yeah. There we go. And I would also say like, it's not just like net new projects. Like there could be a couple that end up like Solana where like they just build through this like really dark time, right? And like they have like some builders that are super committed to them, even building it during like the dark, down only days. And then they come out the other side looking great. So I think, we'll have room for new entrants like Delta, and I think there will be one or two of these infrastructure platforms that everybody wrote off that like come back, with a good end of 2026, maybe 27. Who knows?
I would like to put together a prediction on corporate chains, and I want to actually flesh out a framework here. So I'm not just because I think so much of this is timelines, but I think in general. What Ethereum and modularity and kind of this was Celestia's whole viewpoint as well got right was I think the ultimate. First of all, it doesn't need to be binary. There are massive integrated ecosystems like Apple, right, versus the more Microsofts or the Googles of the world, which are more modular and specialized. You can literally just do both. It was silly that we ever tried to make it a battle. Yeah. But I also think that the modular side of things really appeals to me. I understand. I do subscribe to this idea we're going to bring everything on chain and there is going to need to be specialization. I think what Ethereum and Celestia got wrong was the magnitude and the timing there. And we way overbuilt and way over specialized before the demand materialized. And so I think within that context, I think we kind of swung at one point. Remember how consensus modularity was as an idea? We're going to swing in the opposite direction. And I think corporate chains and corporate L1s are going to be a huge theme in 2026. And I'm ultimately not bullish on almost any of them. I think most of them will end up using an L2 framework or building on something like Delta. And I think that we did this whole episode on specialization and being more intentional and strategic around where you want to focus in the value chain. I think that logic will eventually kick and that gravity will kick in, but I don't think it's going to happen in 2026. And I think you're going to start to see a lot of attempts and big swings on goal here. Tempo, Xavier, I'm just on the other side of you on this one. The team is so competent, right? Like Stripe are such goats at product. The Paradigm guys are so smart. I think the fundamental challenge with this is that it's just not perceived as neutral. And I don't think it strategically makes sense for them to be an L1. I can't make my brain see it. I would be happy to be wrong on this, but I just don't see it. So I see Tempo debuting to a lot of fanfare. I think, frankly, that team is just too good to not launch with one or two big apps, a bunch of money lined up, all of that stuff. I think they're going to have it lined up and it's going to look really good. But I think they're going to struggle to gain true adoption on their L1. And I think ultimately I see Tempo becoming like an L2 or something like more of an execution environment. I think Circle is going to struggle with ARK. Sorry, love you, Circle, but I can't see it on this one. I think USDC, the value, I think there's more network. Everyone hates on USDC in crypto. I think that's a really good product that has a ton of support already. My kind of counter, if I were Circle, I would stop. Here's a hot take for you. I would stop paying distribution fees to Coinbase. I would call their bluff and say, go ahead, launch a stable coin, because they're not going to do it. I think Coinbase is actually already in, like, you remember at the end of 2022, they were trying to do everything. And then to Coinbase's credit, they really reined it in. And they, prioritize, they like cut their NFT exchange and they did a bunch of stuff. I think I see Coinbase trying to do too much again. And I think, honestly, if you wanted to do the baller move here, Jeremy, like, I would just call their bluff and say, go ahead, launch your own stablecoin now. Because I don't think they'll do it. So I think USDC is a great asset. I do not like ARK, the chain for them. I don't see it going anywhere. And I don't think it's going to work. The like wild card in all of this for me is Robinhood. That was, if I have to give myself one piece of credit, I think it's pretty right on that going into 2025. They have unbelievable product discipline. You rarely see Robinhood launch a flop. Like, almost everything is successful. And I think that comes down to Vlad being such a product-centric founder. And so I don't know where the momentum is going to stop for them. They've successfully made inroads into prediction markets. They're much more singularly focused on the everything exchange. So I don't know. Frankly, I have to. It's hard to know when they're going to fail because I just haven't really seen it in crypto so far. So those would be my predictions, though. For I also think I think we're going to see a BlackRock chain. I just like, they have been doing so much. They've been leaning into this space. I think that they basically made US ETFs a thing. I think they want a big slug of this space, and I think that platform mentality mindset is going to appeal to them, and they're going to say we should just own more of this. That's an out there prediction, but that would be my out there prediction for the year.
Yeah,
go for it, Xavier.
I think I've already mentioned it several times over the last few weeks, but yeah, Tempo I'm excited for. ARK, I agree. I'm not really seeing the differentiation, to be honest. I mean, we've already seen things like Plasma, etc., go after a similar go-to-market, and Plasma is still kind of TBD long term, if that will be sort of heavily differentiated in market. The BlackRock one is interesting. To be honest, we haven't even discussed it this podcast, which might be outlandish for some, but like Canton in itself seems to have some eyeballs on it right now. Like, whether or not that's a corp chain or not is another question. That's a public corp chain as opposed to like a more sort of permissioned one. So that'll be interesting to see as well, the difference of what is better this year, public or permissioned. But I think with most corp chains, I'm not that bullish, because I agree with your overall sentiment of both of you around the fact that, it is incredibly neutral. It is permissioned. There's like limited sort of capped growth. At the same time, with Tempo, the like really left curve thesis is like this is a massive opportunity for merchants and their own internal transaction volume, and like developers want access to distribution, et cetera, and its EVM has a great team. So I do think that they'll have at least one or two breakout apps on Tempo in 2026, and yeah, again, like potentially be a top 10 or 20 kind of like crypto asset. So let's see. I guess we'll have to look back into a month's time.
Yeah. I'm not as sure that there will be like breakout new apps on Tempo. That's a really interesting one. I think that, the reason Tempo got the $5 billion valuation is that Stripe can just, with like add a module to every single, checkout page of every merchant that uses it, right? And then all of the surrounding sort of like services like Klarna, right? We've seen them already like offer us or announce a stable coin on Tempo. And so, yeah, I think like they have probably the strongest like bull case for me. And it's not, I don't necessarily see like the native new DeFi apps killing it there, but I do see like the potential of just getting a ton of Stripes, volume running on Tempo. Arc has very like hello fellow kids vibes. And I think like that just not super controversial. I wonder if it'll do better than Plasma. Like Plasma kind of had like a moment and then fizzled out. But yeah, I see like kind of a similar thing here. So yeah, I don't have too many other like hot takes on this one. And yeah, I'm going to leave Canton alone because they got mad at me last time.
Okay, we don't have to pick on Canton. I think Canton's gonna be absolutely fine here, and that is the risk case, by the way, for Ethereum, is that this becomes such a sexy category for finance that there's much more competition on the RWA issuance side of things. I would love to. I know we're already we're long in the tooth here, but I got two more categories that I want to go into, which is one kind of this general category around VC investments, markets, that type of thing, and then maybe we can end on prediction markets. And Xav, I'm particularly looking to you here in your investor hat, but my thoughts are to go through all of these. Is I think there's going to be real pain in VC this coming year. I think there has been pain already, but I think it's going to start to get reported on and covered more deeply, and I think a lot of that's going to come to light in the next year or so. And I think for the first time, I don't know if folks noticed this with like the Tempos of the world and some of these fintech, vertically integrated fintech, like kind of stablecoin banks, but some of the big traditional fintech VCs are moving into the space. And I think some of the VCs that thought they had crypto on lock are going to be really surprised when crypto native founders opt to take these more traditional investors' money as opposed to crypto VC money. And I think there's just going to be like a little bit of an existential crisis in this whole group of investors. Now, I think the good ones, the Parafis and the Paradigms, et cetera, of the world, I think they'll be great. I also think ones that have positioned themselves well, like the 50Ts, et cetera, like in kind of more growth equity. I think if you have kind of this durable moat and people understand where you belong in the space, but I think the category that's in trouble here are kind of the generalized like mega fund, 2-3+ billion AUM, but it's not clear where they've positioned themselves. I think that's going to be challenging. I think that'll be challenging. I also think VC in general is going to be anemic. Like there's about 30 billion of VC investment in 2021. We are down even this year in this bull market to around 25. I think we're going to continue to see that downward trajectory into 2026. I'd call for like somewhere between 12 and 18 probably, but I think the downward trend resumes. And I think it gets concentrated in a couple of big Erebor style deals that like feels almost separate from the rest of crypto. And yeah, I think those would be some of my predictions for this next year.
Yeah, I think in general, again, directionally align with your sentiment. In terms of like crypto venture on the whole, I would maybe make the case that since the FTX crash, it has been pretty hard in crypto private markets. I mean, there was maybe 12 months after that where people sort of like there was just excess capital that had been raised and founders could still raise, etc. But to be honest with you, from like 2023 onwards in crypto venture, especially for emerging managers, I think it's been like very, very tough. So emerging managers, anyone who has a fund 1 up to a fund 3 is classified as an emerging manager. And I would say in crypto right now, it is just tough actually to break out as an emerging manager. And you had that kind of class of 2017, including legendary investors like Multicoin that like broke out back in 2017. And I do actually think that right now in crypto, there is an interesting opportunity for emerging managers to become like the kind of Multicoin of the application kind of product era. And to be honest, I do think 2026 will be a very, very good year to be investing in crypto venture. Valuations have actually come in line with like what you'd expect, and if anything, look very, very appealing compared to AI. And I do think actually sophisticated LPs, which are investors in funds, understand this. They understand that AI is very hyped, and they understand that crypto is here to stay, and that there could be very interesting investment opportunities. So I think we're like really sort of in the middle of this awkward timing phase of crypto venture, where it's kind of like the tail end of that fallout from FTX, where a lot of LPs lost confidence, especially in the US, with just like crypto as a whole. It's taken them years to rebuild that trust. And now, heading into 2026, I feel like regulations are here, but even still, 8-9 months later, at least in my view, the bigger US LPs are still just kind of warming up. And even then, they want really bigger, more established funds. And to your point, Mike, founders who I work with, for example, they do actually want to work with Web2 or like more traditional funds. And I can tell you why. It's because when you're building out applications and products, etc., what you're really looking for now in this like era of that is distribution. So you want to be working with these massive trad funds that have distribution across like all these different companies, hundreds of portfolio companies across like all different industries and categories, etc. And so like you already saw in 2025, rounds like FOMO got done by really big name trad funds. I think that will just continue. This is like the era of fundamentals, as we mentioned as well. So I do think that there'll be some sharp elbows with Web3 and Web2 VCs in 26. And yeah, potentially some interesting deals that get done by crypto VCs early that get marked up by more trad VCs. And that, in my opinion, is a great opportunity for many VCs out there. So yeah, super interesting time, I think, in crypto VC. But just to finish, I do think it is also really, really tough still. And Mike, to your point around maybe some numbers being reported, etc. Like, unfortunately, there are some funds out there that have had a harder time, and this is just unfortunate around the time that they raise the money and the valuations, etc. But probably there'll be many that officially die out. I think in 2026, if they're not dead yet, they might be dying out in 26. So that will definitely, I think, continue to happen, and that will then start the next cycle for venture, I think, in crypto.
Can I add one more thing too? I think partially also the reason outside of the distribution that more traditional VCs have is there's more institutional knowledge about how to build and scale companies in more traditional VCs than in crypto VCs specifically. And I think this comes down to where the opportunity has been for crypto VC, which is to be very early in projects, to understand narratives and to understand crypto native things like smart contracting safety and things like that. But I think a lot of those are sort of solved problems. And I don't think that skill set is quite as valuable or as much of a moat anymore. And I'm also speaking, I'll shout out our primary investor, 50T, who kind of positioned themselves as being later stage and hired a bunch of operators to give support. And I don't know, like my personal experience as a founder too is generally, it's your job to understand positioning and product. And that, like, if you can't do that as a founder, if you're relying on your VCs to help you with that, like, you're kind of cooked, I think. But what isn't as obvious, especially for a bunch of first-time founders, which is what crypto mostly is how do you build and scale companies? How do you structure things? How do you make difficult employee decisions? That's the type of stuff that, often when you're analyzing companies, you view it purely from where did they position themselves strategically. But generally, when I look at the companies that made it versus didn't, it's all internal people decisions. And I just think that the more traditional VCs are better set up to help founders scale companies. And I think the great crypto VCs. There are crypto VCs that can do that, and I think that they'll lean into that as a value proposition. But that's where I just think if we're in the scale up phase, then that skill set and core competency is going to be continuously important. Just purely from my own founder perspective, like that's what's attractive to me about those firms. Okay, let's. Do you want to end on prediction markets? And we also didn't really talk about AI, and I know we only have about 10 minutes here, so maybe we can rip through these. But I've got two on prediction markets, which are I frankly like such a cool category win for crypto that outside of stable coins, I think it's kind of the only thing in crypto that's really made it mainstream this last year, but it went mainstream in a really big way. I think next year will be a good year for prediction markets, but my prediction is we're at a little bit of a local maxima. I don't know if you guys caught the Shane Copland 60 Minutes glowing interview the other day, but just having watched these things for a long time, nothing goes up in a straight line forever. And I think some of the legal challenges around prediction markets and how closely it intersects with gambling, I also think you're going to start to see we saw an announcement from DraftKings getting into prediction markets. I think there's going to be both increased competition and legal challenges, and I think there will be we're going to face a little bit of a bump in the road around prediction markets this next year, but the structural trend is definitely still bullish, I would say. And I also continue to be bullish on both Polymarket and Kalshi. Again, the kind of meta theme for me in my predictions is that winners keep winning, and I think that those two have really cemented themselves. And I know that there's a million new prediction markets that have gotten funded. Not to be a hater, I don't see many of those taking off or being successful. But where I do see there is being inroads is I think this like everything exchange meme is going to be super powerful. And I think there's going to be inroads from sexes, potentially on the crypto side of things. Although it's still a question mark for me. Prediction markets are pretty different from the markets that they're used to. I'm unsure. Again, Robinhood has made great traction here. Hard to see where their product chops end. The last thing, but I don't think new startups are going to be super successful here. Also, like the DraftKings of the world and audiences, apps that have big retail audiences, especially in sports, they're all going to launch prediction markets and probably be somewhat successful. That'd be my prediction for.
Yeah, I guess the big thing for prediction markets is like, can you break out of sports betting and politics? Because I think like outside of those two like subcategories of things to bet on, there's not been a ton of adoption, not a ton of volume. Like the hedging for like serious institutional like use cases, like hedging as a use case has not really like come. Don't really see that in prediction markets quite yet, but I don't think like, and that was the original promise, right? That like Robin Hanson like wanted prediction markets for. So yeah, that's a big like question mark if they can break out of that, and if they can't break, if like that's where new prediction markets need to focus, right? Like new pockets of activity that are not fully saturated by the winners. Like you're not gonna come in and beat Kalshi and like Susquehanna market makers on Kalshi for sports betting. Like it's just, too liquid and efficient already. So what you got to pick your niche. Then the other thing I would say, like, maybe this bleeds into the AI conversation, but I think we're going to see LLM judges, a lot more integrated into prediction markets, and all different types of applications. Honestly, I think they will like totally replace probably the weakest point of prediction markets right now, which is like relying on this, UMA Oracle for Polymarket, or requiring you to have like these licenses if you're going to do it in house, right? LLM judges are a really nice sort of like, you can stay unlicensed, but you can also move much faster and with much less dependency on like, the price of UMA's token moving up or down or some other Oracle, service. So, yeah, I'll pause there and save, hop in.
Yeah, I think my great prediction. I think this one's we're going to look back on and see that it was very, very correct. My only point to add maybe is that I do think that there could be room for a kind of like interface for prediction markets, which is almost like a hyperliquid or like an Axiom that like does a lot in volume and captures a bunch in fees. So I think the opportunity is still up for grabs, and we could see a winner there in 2026, which ends up doing very well. Don't know if it gets acquired, Polymarket or Couch or something like that, but I think the outcome could be very, very sweet. So yeah, I think in general though the trend's here to stay. So couldn't agree with you more, Mike.
I have one just comment. Myles, I love your prediction on LLM judges there. But I would say I don't think prediction markets should actually stray that far outside of politics or sports. If I were in the driver's seat of one of those orgs, I would just double down on that category. And I actually want to, it's funny how much we've memory hold this. I hate to do this, it's such a lame thing to do, but I'm going to bring up one of my tweets from July of this past year, which is, or sorry, of 2024, which is Polymarket should add sports betting. This is why I think it would be good. 10 to 100x larger market, blah, blah, blah. What am I missing? And all of the comments, if you'll see back then, is sports, it already exists on Polymarket, but it's not used. DraftKings is going to eat their lunch, blah, blah, blah. So it's only within the last really year or so that sports betting has taken off, and it's a huge category. So I actually would say I think it's actually fine to just continue to focus on that category.
Agree. And I was going to say maybe like one more comment that is sort of related to what Xavier was saying with like aggregators and just like for these sort of markets. Like I think this is my last one on AI is that like I think most major apps will have a chat interface, as like the primary mode of interacting with them by the end of 2026. And this could mean like, there's like, this is not what a lot of people think about when they think about agentic finance, or what they think about, like when they think about intents, right? Like the intents meta, I think is finally finding like, its moment with agents. And shout out to Chat. I think Save, awesome portco of yours, that's building like, I think what you'd see is like an early indication of what this could be, right? But you'll go into like, a Polymarket or a Kalshi or even like a Coinbase. And I think like the first thing, people are going to do is like, converse with like in a chat module with an agent. And that is going to come, more quickly than people think. That's my prediction for 2026. I think that, it will start bottoms up and sort of like retail lower stakes settings. And the real big question mark is how quickly it, gets adoption in like really like high stakes settings like treasury management, things like that. And that's where I think, just like LLM judges need some sort of like verifiability, like that's where, verifiability, and intents are going to like finally have their day in the sun. As when it comes to like, native AI integrations into like every app.
Yeah, I totally agree with you, Myles. I'm hoping that it's a big thing in 2026. I think it'll start seeing adoption and growth. I don't know if it'll be like massive by the end of the year, but I do think that it'll start and at the intersection of AI and prediction markets. So what Myles was talking about, which will be possible in 2026, is using like an LLM to understand more about these markets on Polymarket, for example, and then actually executing trades via that same interface. I think that's an opportunity in itself. And I think Myles was talking about it a bit just then. And that could be a super interesting sort of intersection of AI and prediction markets, which we haven't really seen just yet. So yeah, and I think, I guess we haven't touched on it as much, but crypto AI as a sort of topic as a whole, I do think that we will start seeing agents putting money to work. And I want to really simplify the problem that needs to be solved in crypto, which I think is actually being solved right now and will be solved in 2026. And I feel pretty strongly about this prediction. Like, I do think that guardrails will be built in 2026, which make LLMs more deterministic and more appropriate for crypto, and reduce hallucinations. And that's really what we need the most in crypto for agents to work in the first place, as well as like really great contextualized data. And we now have great guardrails and contextualized data on chain. And so we actually have all the info that we needed for agents to get there in the first place. And it's only getting stronger. So I do think that now, 2026, it's been like a speed run of info for AI agents to catch up to where we are and what is needed for blockchain for it to actually be applicable. But I think, 2026, I'm very bullish on initial AI applications going live. I know that's a bit anti what you're saying, Mike, in terms of timelines, but it'd be super interesting to see if I'm crossing my fingers I'm right here. Because we're working with some.
No, I agree. It's like I wrote down it's going to be like the year of AI safety. Like it's a great year for guardrails, I think. And the like speed of adoption or like the speed of development of these guardrails and just like how confident people are in them will determine whether this is like something that arrives in 1 or 2 years, or if this is like autonomous vehicles where it's going to take, 10, a full decade between like this works and this is safe to roll out in prod in public, right? And I think, I hope Delta can play a big role. This is in facilitating these guardrails. That's something I've been working on for a while. So yeah, we'll see where it goes. It's super interesting and something I'm paying a lot of attention to.
Yeah, I think I'm fully prepared to admit that this might be a problem that I'm too close to. And sometimes being close to a problem makes you less bullish on the timeline. But I just think the guardrail side of things is really difficult because at least the way that LLMs currently interact with crypto data, it's really challenging. And like just as a thought experiment, right? Ask an LLM a really basic fact, like how many fees has Uniswap generated? And what it doesn't do is hit anything on chain. What it will do is pull from news articles. And so we're like a little ways away from LLMs directly referencing crypto aggregate data. What LLMs definitely can't do is parse raw or even indexed and formatted data. And so just the challenge of making that first fundamental hop happen is huge from my perspective. And there's a whole business model there that hasn't really been figured out. And so I just like, I can't be bullish on it for 2026. I think it's going to take longer. And that's not even, before you have to solve that huge gap. And then you need to solve the trust of, okay, even assuming this data is right, there need to be all these different types of controls around having the LLM not hallucinate. And I think I would be, when I hear like agentic commerce, I'm like, that feels on the crypto side of things longer than it even feels like hitting an API from your bank account. But even then, I think it's a ways away. I would say like 2 years. I don't mean to be a downer here, but I think it's just quite challenging because even the way that, like, if you were to get into the weeds of how even different data in crypto is pulled and structured, like the differences in between like how Blockworks does it versus Token Terminal versus DeFi Llama is big, and a lot of it hasn't been explicitly set up to be good for LLMs. And yeah, I don't mean to throw cold water, but it's like a huge corpus of work. So that's why I'm like, I'm a little further out on this timeline. Yeah. So my prediction was I do not think this will take off in 2026, but I do think there'll be a lot of work done. I think there'll be a lot of work done and progress made on this category in general. But yeah,
fair enough.
All right, with that rousing end to I think that's all the time we have actually. But
we're gonna do a couple more episodes on this AI stuff, so we'll get into it this year.
We will absolutely get into it. I want to end actually on the note that I think the way that I hear the tone and expression people talk about crypto is like there's like a pall, and people seem vaguely disappointed in a way that they can't articulate. And I think where that comes from is, oh no, I'm not going to be able to hit 100 bagger on altcoin bag XYZ, and that's probably true. You will probably not be able to hit those 100 baggers on your random altcoins anymore. I view that unequivocally as a positive. And it's possibly because I've been more focused on like the builder side of crypto for the last 8 years, but that's not good for capital formation and company building. Like having something go from nothing to $1 billion in a couple months, that's so distracting. And I actually view it like, I just view it as a negative, not to be a Debbie Downer. I'm so much more excited about the long-term consolidation, building real value, moving outside of our little bubble, creating real products that the world cares about and generates value. Like, honestly, this used to not bug me. People being like, oh, your little crypto ecosystem. I'm doing this for 8 years. I want to make a positive impact on the world, and I want real products that work and are valuable. And I'm so much more excited about that than being able to than what the industry has been for the last 8 years. So, I actually saw Dougie DeLuca posted this kind of chart of like being in the post-imagination era. I think that's going to rub a lot of people the wrong way. I think we're going to need to make compromises on some of the like hardcore ideology that we've had in the past that just clearly hasn't been working. I think we're also going to need to move towards less of a anything is possible, new primitive every day, into taking the primitives that obviously work and scaling them. It's different skill sets, it's a different mindset. But I am so excited for this next year and next 5 to 10 in crypto. I think it's the best time to be building or even investing in crypto. And yeah, I could not be more excited. And I genuinely mean that from the bottom of my heart. Like I'm so pumped about where this space is going. So yeah, I don't want to end on a negative Nancy prediction. That's how I genuinely feel going into
Bullish.
2026.
Very bullish. Very bullish.
All right, lads. I think that's all the time we've had. We've gone for a long time. Folks who have joined us for both episodes here, if you are just listening to this episode, I would highly recommend go back and listen to the 2025 wrap-up episode. But Myles, Xavier, this was a ton of fun, guys, and we'll see you back for maybe we foreshadowed a little AI content, so maybe that's how we'll kick the year off.
Yeah, that was awesome.
Let's do it.
You guys have a great weekend, and we'll chat next week.
All right, chat next week, guys.